Hey folks, welcome to the Market Internal Review for August 14th, 2023. Alright, kicking things off, we had a gap down not quite $1.95 on SPY. Started with a bearish add and vold price and volume for the New York Stock Exchange and lagging their 20 SMAs, but both are showing a bearish trend there. Of interest specifically right at open was the bearish tick extremes down here and the extreme closure. So not only did we open up at negatives, extreme negatives on the internals, we also closed there. So very important to take note of that. And we'll hide the TiWAP for just a moment. The main thing to note is right where we were closing on the tick down here, close to negative 800, negative 1,000 on the very beginning candle here, we didn't make any new lows. So we've got this low here, then the next extreme closure, actually by a smidge, is a higher close. I mean, we're talking maybe 5 cents, but still something to note. If we're going to see extreme selling to the downside based on tick, and this is not the exhaustion point, I would expect to see us break into a new low, not a higher close on SPY. Even though tick closures on the average are headed down, I'm not seeing that in the price. Now, with the new market internal RSI indicator that I released this past weekend, I watched it today, and the first thing I noticed was, per the RSI measurements, we are oversold, which or strong selling. It could be either one of those. Interesting to note is actually the divergence of SPY's own RSI measurement to that of the market internal New York Stock Exchange, my calculated RSI. So high divergence, that means SPY is trying to make its own move irrespective of what the entire market is doing. So I didn't actually quite plan on using this that way, nor really even having it up with MIT intraday, but since it's kind of a newer toy, I wanted to try it out. And it just seems so intuitive to me, like, hey, SPY is actually perhaps going to be pulling upwards while the rest of the market is still settling down here at lows. Now, looking into when this crossover occurs is right around 9:56. That's also roughly right about when we start seeing tick closures on the average trend back up. So anytime I see average tick closures, notice how it actually is breaking the 500 to the downside. When I see that, this is lagging it a little bit. It is a completely different measurement though, so I don't even know if I'd call it lagging or just a different read based on different metrics. I mean, same underlying data set as far as tick and trend and add and vol, but just different overall how it's interpreting those. But the other thing to note is we had this nasty engulf. I mean, it just engulfed the first 15 minutes. If you're an orb open range break trader, it just engulfed the entire opening range. Then we had this wick back up and then another engulf, completely reversing and engulfing all of this. It's a wild morning. I'm updating Twitter as it's happening and just mind-boggling. But if we have the gap zone here, I'm going to hide MIT and the RSI for a moment. So we've got Friday's TiWAP price of 455.14. That is effectively where we've stopped every time so far, establishing that 15-minute initial range. And then we've got a TiWAP standard deviation, first standard deviation low that we have stopped on at the lows. Dang near every time. This one almost to the tick is where we halted and reversed all the way back up. So with this big candle here, we've got trend balance, which is nasty, Average tick closure starting to trend up. I'm seeing this crossover, and I'm seeing this gap. We're not leaving this opening gap here from Friday to today. If we go look at the ad chart, right at 948, ad is sitting at 1500. I don't know why 1500 is a specific level that ad absolutely bounces on, either plus 1500 or minus 1500. I don't know why it bounces here sometimes, but it absolutely does. This is an important level. This zone, when we accept this zone for New York, it's a bear day, or at least for some time. Same thing up here, but for the bull side. So that was at 948. Okay, 948 is right here. SPY bounced, protected the TiWAP range, and reclaimed all of this initial price action and completely engulfed all this negative tick here. Once I saw that, I mean, that really confirmed for me that we're going to fill this gap. There was no mistake about it. Now it's only $1 range, so it's not, I mean, it was profitable for me, but it's not a big deal probably to a handful of traders. But this was great. This move here, look how many bull bars we had with zero selling in between. This right here, but from here to here, this is so 10 minutes of solid just buying. Quite impressive right after this candle here. We only retraced about 50% of this candle. So 50% is a powerful measurement. I've said it in many videos. And then away we go, right? We check previous day's high, 446 and change. But what's important to note is just all these TiWAP levels that we checked out. I mean, all these wicks almost to the tick. This one we blew right through, and I think this is mostly the market pushing with strength over previous day's high. There's usually a reaction. If it's going to go, it's just going to engulf it. If it's going to reject or basically just trade around here, you won't see this kind of candle. It'll duck back below, trade around sideways, consolidate. But this is like a statement candle. We went right through. This TiWAP level wasn't anything compared to the power of previous day's high. But past that, you'll notice a lot of wicks right around this TiWAP level. Later, we had another one almost bang on right on that TiWAP level. Really impressive stuff there. But once we passed this previous day high, we also had a $2.85 expected move plus minus on SPY. I shared that on Twitter today, and from the open price 285, gosh, I hope I'm getting this right. It was either SPY or Q that had 285. SPY, so 285 was right here at the highs for that expected move. That was very important. It doesn't even really matter. Q and SPY both blew right through their expected moves by the end of the day. Yeah, SPY was 285. 285, it was really close. That was right where we rejected multiple times today. $2.85, we filled the gap. We reclaimed Friday's TiWAP price. We cleared previous high day. We surprised the 0-day options market. I just saw a posting. If I can find it in post when I edit this video, I'll share it. But I just saw a posting. Somebody shared a measurement of all of the options volume for, I believe, SPY, Q, maybe a handful of mega caps, and the majority expiration for the options market was zero DTE. So the 0 DTE expected move, that market, and I believe they said it was mostly institutional volume. So that's a big deal. When the institutions are surprised, effectively when the expected move is breached, that's a big deal. So in it, I always anchor my expected move measurement right from the open, because when you're trading, I'm getting off the rails a little bit from internals, but I do believe options measurements on underlying charts to be somewhat of an internal. I mean, that's why I include the puts versus calls measurement on MIT, because it is an internal measurement, just like VIX is an internal, which is measuring options volatility for SPY. But anyways, the reason I anchor my options expected move measurements right at the open is because the volatility premiums that are available to options sellers or other various options traders, the premiums are most liquid. They're the highest valuations near the open. I've done my fair share of selling and trading 0DT options where you benefit from theta decay, where you get to keep the premium after enough decay has occurred. You buy the contracts back cheaper. And I can tell you past like 1030 and probably even 1030 is pushing it, but past 1030 you're not collecting enough premium to cover the risk. It's just not really worth it, and I'm sure there's probably people that would disagree with me, and I don't claim to know everything, but it's been my experience that past 1030 you're trying to sell 0DT options on SPY or Qs, or I mean maybe SPX, but boy, if you're surprised, if you have a bad day, you're going to pay for it handsomely. That's why I anchor off of the open, because all these institutions, all these big private retail traders, maybe other sectors of traders, they're positioning basically off the open, or within the first couple 15-30 minutes of the day. The hour is definitely the cutoff, I would say. And so what else do you have as far as the price is concerned than the open price? You've got maybe the pre-market session. Obviously, you've got all the data prior to the day's open, but that's where I find it so important, because you've got a ton of traders that are selling options directionally or neutral, like iron condors and different things, and they're trying to capture the range. And so they're pricing in, like I mentioned in my 68% accurate levels video, the options market has pretty much all the research done for you. If you want to go see what the expected move is of any stock, go look at the options chain. It's every trader that's positioned for that stock. It's all their research all put together, and that range is the result of that research. So anyway, so it was not a surprise for me to see this rejection here. This is the expected move. When you have this, between all the dealer hedging, the option selling, the buybacks, the coverings of shorts, and whatever else, you're going to see this kind of price action until things sort themselves out. You have this expected move, then you've got trend balance, right? You should expect some kind of reversal or reversion, whatever you want to call it, back to the mean. Now, one thing that surprised me about the day was the fact that we did revert some, but we did not revert near as much as we have been seeing on a trend balance day. I mean, damn, last week we had a $7 range I covered, where we went up almost $7 from the gap low, and then we gave it all right back up, $7 back down. I mean, that's probably an extreme mean reversion, but that's still a mean reversion. So when we had the pump up, the options market was, as I considered anyways, was surprised. Their range was broken for what they had priced in. That's roughly about where ads said it's time to stop. The whole market kind of paused, and we got this little tight range here for the rest of the day. So this is where like that balance finally manifests across the entire New York market. So Vold, what was surprising is it never stopped going to the bear zone. It started around a little below balance and established somewhat of a tighter range for a broad part of the day, and roughly around 1:30, one of our favorite times here, it finally started to break that range and head down in towards further focusing in declining stocks. So the the down volume beating out the up volume for the rest of the day, even though SPY ripped and Q's definitely ripped. I'll show you Q's here in a little bit. It's kind of sussing me out a little bit as to what to expect. Usually, if volume is not and price of the ETFs are not in agreement, that's usually can be a swing opportunity. But with trend balance, I wasn't feeling it today. I've already got so much exposure long side for a myriad of names across a handful of sectors as well as ETFs. I don't really feel like I need to swing anything overnight, though it can be lucrative. One thing that was kind of neat to see with the RSI is we have our top on RSI. Once we break out of this extreme low, then I'm going to call this kind of the established low intraday. You can see pretty much the established range as compared to the trend balance. I think the trend balance is represented quite well in the RSI measurement. I thought that was very neat. We barely made any new highs on the RSI or lows. So I think this measurement is pretty darn accurate. And you can see right after this pump we had, where we have SPY pumping compared to the New York Stock Exchange, we finally come into this squeeze territory, but we're not at extremes. And we basically just have full alignment at this point between SPY and the New York Stock Exchange, basically from 11:30 to the rest of the day, save for maybe a couple of peaks here where we're trying to test that expected move high range. So very neat to see another lens of trend balance. I did not try to force this measurement to be representative of balance. This is just how it came out. So this further confirms for me that these measurements and the weightings and everything are pretty darn accurate to what's actually going on in the market. So this was very cool to see. And it definitely is helpful. Like when you see this large divergence is done after, roughly the first hour and a half of the day. I mean, save for like these peaks here, there really wasn't a whole lot of opportunity to trade today past this initial volatile move. So very neat. Turning the tick levels on, won't be too surprised, I hope, if you go to see this, being that we stayed from the low where we had a big fight in the morning. So nice thick tick level there, adding as support, rip through the gap, surprise the options market, and boom, we stop pretty much dead on these tick levels for the rest of the day until the very end. So very interesting to see that. We did have a couple of decent trades off of the TiWAP, classic TiWAP break and a retest of standard deviation high entries. I don't typically like taking these kinds of entries though once the range of TiWAP is so flippin' huge, because this TiWAP is technically supposed to be, per the strat, your stop loss. But that's a $1.21 stop loss on a 0 DTE, even a 3 DTE. You're going to be feeling the pain, and the risk reward is just not there, especially considering we've already broken through the entire TiWAP range from Friday. So what are your trims? I suppose it would be your second and third deviations. But given that we've already surprised the options market, given that we've already filled the range, we've already broke through previous day's high, Yeah, that's a pretty low. It's a low probability trade at that point. My best advice, if you're going to do something like that, if you're just absolutely bored and you want to trade, which is a horrible idea, take these breaks on standard deviation and just grab the scalps at the nearest tick level. I mean, we did have this TWAP level here, but even then, that's not really enough to merit the risk. You're risking at this point. I would not set a stop loss at TWAP. I would put it maybe like under this tick level, but look how many times I got wicked. You would have been getting stopped out so many different times. It's not worth it. I think if you don't catch these bigger moves when they occur, just close out. Also, the fact that we were not really doing complete mean reversions, even though trend was balanced, right? That's just time to close the old laptop down and go do something else for the day. Qs, go take a look at Qs. Qs was on another level today. I'll tell you, man. They ripped with much more force than SPY. They also surprised their options market. They were around 230, somewhere around there, 235, I think. 235, I believe, was the expected move. That was actually below the previous day high, which honestly, I was surprised that's what the option market priced in. I think given that we're at lows, we've been selling off for the past week or so. To me, honestly, the options market seemed pretty ignorant to the fact that tech could make a complete fool of the market by just ripping because we're at lows. This market is so weird right now. Yeah, this was just really a surprise. I would have expected the options market to have priced a tighter range for SPY and a broader range for Q. So that was really bizarre to see. But you had one good retest with the previous day high, also coincided with a tick level, a TWAP level. The tick levels were a lot more spread out from SPY, but you had kind of the same exact thing where this level here was rejected, but a tick level was made, and they just couldn't quite break it right till the end of the day. So it's very, very crazy market today. No squeeze signals. If you've watched the market internal RSI MIRSI, if you've watched the MIRSI video, so there will be squeeze signals, and that's these. If I can find one, that's these lines here, these shaded background areas. So none of those today. I'm kind of not surprised. Trend balance. We'll head over to the multi-time frame TiWAP analysis. We're looking at monthly and weekly here, and I've updated my TiWAP setup, and I've taken the liberty of adding one for the week and one for the month, 0.5 levels. So 0.5, 1.5, and 2.5. And they're just shaded a little dimmer. I don't know how well that's going to come out in the video, but instead of me drawing my fib tool through the broader first deviation levels to get that 0.5, I just thought, well, heck, I might as well automate the dang thing and let it do it for me. So that's what I did. So interesting today to see right on SPY is that 0.5 TWAP level coincided excellently with the Friday session TWAP standard deviation level. So if you remember back over here on SPY, turn off some of this junk. Oh gosh, I got too much stuff on here. But yeah, first deviation low for Friday's session coincided with a 0.5 deviation weekly TWAP level. So very interesting. More confluence there. Obviously, we got the gap. I'm going to turn the gap zones off. I don't really need to see those right now. So we got that. And once we reclaimed previous week's TWAP price of about 447, that's where I noticed we just kind of started a range. That's, I don't know. This would be an interesting measurement to actually see if that 285 coincides with anything here. No, it does not. Yeah, so I'm still struggling with what I look at to figure out why 285. Why did the options market price that in? I really don't know. Nothing I have really coincides with it. It always bugs me. I like to have a reason for it. I mean, it's a 0.5 of a 0.5. It's a quarter measurement between TiWAP levels, but I don't like that. We basically oscillate quite perfectly around this previous week TiWAP level. Pretty neat. Not really a whole lot to glean here past this. I'm going to cautiously expect more upside, but it could be weak. I don't know what all news we have. Earnings is weak as far as I recall. Until we reclaim this monthly TiWAP, which is the orange squiggly line here, until we reclaim that, I'm going to keep my bullishness hopefully somewhat contained. Qs, I want to say Qs was stronger today as far as monthly. Okay, no, they weren't. So, and that's the other thing I mentioned for Friday's video last week, that I'm going to be watching the big names. NVIDIA, I'm going to be watching Apple, Microsoft, watching tech. Those have to turn around for this market to pump, as far as I'm concerned. I just don't see the market going much higher if those crackhead stocks don't pump up anymore with their insane PE ratios. Lots of convergence on the TiWAP 0.5 levels. So much here. Really great scalp levels, or just price target levels, trim levels, whatever. Great to see upward trend on the new TiWAP, weekly TiWAP. Still not reclaiming the Q's monthly TiWAP though. 372 is it. That's it for me. If we get over that again and we actually hold it into close on a regular session, I'm going to say, more upside will be in store. The Dow is continuing its neutral kind of trading. This isn't a trend, but it's flat. That's better than down. if you're into some put credit spreads, like maybe I might be. That's good though. Good to see Dow remain. Home Depot does have earnings. I have at least one person I know that loves some Home Depot. Let's see here. The Russell. Wow, look at that. Neat price action against these TiWAP levels. I'll say this. Weekly TiWAP, the price levels, they are amongst my favorite. They're becoming one of my most favorite things to review is the weekly TiWAP levels. I absolutely love it. I'm actually considering adding the multi-timeframe stuff to TiWAP, just as levels that you can enable from different time frames, but more on that later. These levels are really nice. Same thing though, Russ is very weak. They did not fill this gap. We had the daily gap here. Turn that back on for a mo. About $1 gap, and we did not fill it. Now they sold off hard, and actually, now that I'm looking at this, I didn't look at Russ today. This right here, we're back to the Russ commanding the internals. So the Russ, that hard sell that we saw on MIT and on the MIRSI, that was Russ. That's what was going on. So this could be more sector rotation. This could be small cap versus big cap boxing match again, like we saw last month, I think, where every time SPY's ripping but the internals are bearish. It's like, what's going on? It was the Russ. So here we go. This is what was going on. So SPY was moving divergently, as we saw with the histogram, to the Russ. Russ finally catches up and starts playing ball, doesn't close the gap. Still in the second deviation low on the monthly TiWAP. We're still way far away from monthly TiWAP. Well, way far away in terms of Russ. It's $3. It's not that much, but for us that can be troublesome. We're going to check out Microsoft. Microsoft had a darn good day. Look at that. Previous weekly TiWAP, bam, right there. Oh, look at that. Landed right on it at the end of the day. Juicy. This is fantastic. This is why I say I love the weekly TiWAP levels. Still below monthly TiWAP. You're going to hear me say that a lot. NVIDIA, I know NVIDIA had an amazing day. I saw some people yakking about it. Okay, wow. I know Chips Ahoy ripped pretty crazy. I'll show you SMH here in a moment, but oh man, I wish I would have caught that today. Man, this stock probably made some millionaires today. Some degen's gonna be on Wall Street Bets. 32 flipping dollars the market. Oh my god. That's incredible. What's the bands look like on this? Just see you later, man. God dang. Okay. SMH. Chips Ahoy. Reclaimed lower standard deviation. Ended right on this weekly TiWAP from last week. Monthly. Man. Okay. So yeah, an incredible day for SMH. I tried to grab some premium on them Friday and I couldn't get filled. $5. I probably would have exited that trade in one day. Oh well. Great setup there. Apple, I know, is starting to potentially turn around a little bit. So they're about ready to reclaim 180. That's good. Meta was a ripper at one point. Well, in the last couple of weeks, they're reclaiming 306. Jeez. Okay. So heading into next session tomorrow, again, I'm not going to expect much just because of the bearish volume. I want to see if we're really going to buy this up and start trending back higher. Remember last video, SPY was sitting around the 50 SMA on the daily chart. That's just boomer tech for potential trend. If we're going to keep going now, if we're going to establish that this was just merely a dip over the past couple weeks, and we're going to rip through this range to the upside, I want to see some flipping bullish volume on the New York Stock Exchange and close out with that for the day. Not this crap. I want to make this market great again. I want to see that wouldn't even impress me that much. What's a really good day we had like this? July 31st, July 28th. We need to bring back that summer volume. That's what I want to see. I want to see some summer volume if we're gonna actually start going higher again. I know there's some Michael Burry tweet. He put like $1 bajillion into some puts on Qs and SPY. Who knows if that was recent or if he's already out of that trade or what. But I'm gonna ignore the FUD. I'm gonna trade the charts. That's what I do. All right, hope you enjoyed this video. Hope you grabbed yourself a nice piece of this little morning rip. It seems like people are liking the market internal RSI. Been receiving some good feedback on that already. And one bug fix, minimal bug fix. But please reach out, comment, and let me know your experiences. As always, thanks for watching and happy trading.